even though gold is at a new high, it's a contrarian investment to buy it. See, normally when something's at a new high, it's because everybody's buying it, right? So it wouldn't be a contrarian investment to buy a new high, right? You would be doing what everybody else is doing. You would be jumping on the bandwagon. But you can buy gold today and silver and be a contrarian, even though gold is at an all-time record high. That's how skeptical people are, right? There's an old saying that a bull market climbs a wall of worry. Well, that's what you have in gold. People are not optimistic. They're still pessimistic.
First half of the shortened Memorial Day week, gold prices did climb higher, with investors primarily focused on the forthcoming PCE report from Friday. Investors in precious metals are closely monitoring the Federal Reserve's preferred inflation metric to gauge the potential trajectory of interest rates and the likelihood of further gains in gold. PeterSchiff, an American stockbroker and esteemed market analyst, has firmly established himself as a key figure in the finance world. Schiff's analysis underscores the significant ascent in gold and silver prices, which he believes is being overshadowed by distractions from the stock market and cryptocurrency buzz. Despite this lack of attention, Schiff argues that it amplifies the significance and authenticity of the gains in precious metals. However, Schiff observes that Wall Street analysts remain skeptical, refraining from endorsing mining stocks. Instead, they've downgraded major gold companies like Newmont and Barrick, suggesting a ceiling on gold's potential at $2,000. Notably, Newmont's shares surged nearly 12.5% on April 25th, following the company's first quarter earnings report, which exceeded Wall Street's expectations. Schiff predicts that the ongoing rally in precious metals is poised for significant extension before any substantial pullback occurs. The latest Keto News Weekly Gold Survey indicates that the majority of industry experts believe gold prices could either reach or surpass their all-time highs. However, retail traders are displaying a bit more caution regarding the prospects of precious metals. Before we delve further into this discussion, we invite you to watch clips of PeterSchiff's recent insights from his video. Don't forget to subscribe to our channel and enable notifications for timely updates. Thank you and enjoy the video.
Well, while the media, of course, was focused on the May gains in the stock market, they really didn't pay any attention to the gains in the precious metals market. Because as far as I'm concerned, that's where the significant move was. Because we saw gold during the month of May rise to a new all-time record high, even though it ended the month on a bit of a decline. But if I look at the price right now on Sunday night, for the price of gold, we're still trading above 2,300. We're 2,328. So a solid breakout in the month of May. And more particular or more significant is the breakout in the price of silver, which went north of $30 an ounce and never looked back. It got as high as $32.50, I believe, and then pulled back. But it never even got back below 30. It's held up above 30 and closed the month above 30. So that is extremely significant. But I think the strength in the stock market, it's causing investors really not to pay attention. And of course, all the continued noise surrounding Bitcoin. This time, it's really not Bitcoin, but Ethereum, because everybody is now focusing on the fact that the Ethereum ETF is going to be approved. And there's a whole bunch of these ETFs that are in the queue. And so we've seen the original or the initial breakout to new highs in gold, above 30 in silver, and nobody has noticed it. It's basically happened without any fanfare, completely in obscurity. And to me, that's what makes it that much more real, because even though gold is at a new high, it's a contrarian investment to buy it. See, normally when something's at a new high, it's because everybody's buying it, right? So it wouldn't be a contrarian investment to buy a new high, right? You would be doing what everybody else is doing. You would be jumping on the bandwagon. But you can buy gold today and silver and be a contrarian, even though gold is at an all-time record high. That's how skeptical people are, right? There's an old saying that a bull market climbs a wall of worry. Well, that's what you have in gold. People are not optimistic, they're still pessimistic. And again, that's why we haven't seen any of these Wall Street analysts this month, even though we had a surge in the price of gold and silver during the month. Nobody came out and recommended any of these mining stocks. Nobody upgraded any of these mining stocks. I mean, the last movements that were made were downgrades. They downgraded Newmont. They downgraded Barrick. The two biggest gold companies in the world were downgraded when gold was at 2,000. It's moved up 20%. And if you remember, the rationale for the downgrades was that there was no more upside in gold. Everybody assumed that 2,000 was the top, that we couldn't go any higher. And so there was no point in buying gold stocks. What was I saying at the time? The 2,000 was the floor. There was no point in selling gold stocks because gold couldn't go any lower. We were at the floor. And now we're 20% higher approximately, or we got to 20% higher. But none of the companies that downgraded these stocks have come back and said, oops, my bad. We were wrong. And now we're going to raise the recommendation back. No, they haven't even acknowledged that they got anything wrong yet. So we still got a long way to go in this rally, I think, before we have any kind of meaningful pullback. I mean, the pullbacks we're seeing now are not meaningful. I mean, they could be meaningful to somebody who's just day trading and trading in futures, but for real buyers, right, of people who are buying gold and silver, it means nothing. There's not going to be, I don't think, a big enough pullback to wait. People should just be buying the metals. They should be buying the miners. And unfortunately, they're not getting these recommendations from the financial community.
Regarding recent economic data, PeterSchiff raised concerns by highlighting weak figures, such as the Chicago PMI, which plunged to levels not seen since the early stages of the COVID-19 pandemic, indicating a significantly weakened economy. On Monday, gold prices remained flat as investors awaited critical U.S. economic reports that could shed light on the health of the economy. This situation is influenced by recent inflation data, suggesting that the Federal Reserve may have leeway to cut interest rates later in 2024. Additionally, Schiff pointed out a sharp increase in the trade deficit, which he interprets as the economy's failure to meet demand. Despite the current indifference of currency traders, he predicted that these factors would put pressure on the dollar and exacerbate inflation. Now, let's return to the interview.
And in fact, we got some very weak economic data on Friday that came out later in the morning. We got the Chicago PMI. Now, the forecast was for an improvement in May from the April number, which was pretty bad. The April number was 37.9. And the expectation was for 40.8, which would have been an improvement, but still a weak number. Instead, the actual number came in at 35.4. That is a horrific number. That is lower than the low end of the range, which went from a low of 38.3 to a high of 44. So some people expected a number as high as 44. Other analysts that were pessimistic thought it might be as low as 38.3. And instead, we got 35.4, which way below the low end. In order to find a Chicago PMI this low, it was 4 years ago in early 2020, about May of 2020. Now, what was going on in May of 2020? Well, in case you don't remember, it was COVID. It was the lockdown. We shut the entire economy down. And so you have to go back to an economic shutdown to find a Chicago PMI that was this low. What does that tell you? They're talking about this strong economy. We have an exceptionally weak economy that has only been weaker when it was shut down completely. So not only do we have much stronger inflation numbers than what the Fed estimated, but the economy is actually a lot weaker. Despite all this talk about a strong economy, the evidence supports a weak economy. And in fact, we got more evidence of a weak economy with the international trade deficit numbers, which were horrific. Again, nobody talks about these numbers but me. No one seems to care. But the merchandise trade deficit exploded in April to a multi-year high. It was supposed to be $92.5 billion, which would have been a little bit worse than the $91.8 billion from March. Well, they revised the 91.8 billion up to 92.3 billion. But the April deficit was 99.4 billion. A huge widening of the trade deficit because of a 3.1% increase in imports and only a 0.5% increase in exports. Now, again, this evidences a weak economy. The economy was too weak to produce the goods that we need. And so we relied more heavily on imports because our weak economy couldn't produce the stuff we needed. And so we had to rely on stronger economies abroad to produce that stuff. But not only does the exploding trade deficit in goods evidence a weak economy, but it evidences more inflation because we're not producing as much stuff. So we have to import it. But less stuff means higher prices, just like more money means higher prices. We have more demand, we have less supply. And of course, eventually the dollar is going to collapse under the weight of all these trade deficits. You know, once upon a time, when currency traders actually cared about these trade deficits, the dollar would be clobbered on a day with this bad a trade deficit. No one cares anymore. But ultimately, these trade deficits are going to weigh on the dollar. The dollar is going to fall, and that's going to push up prices even more because now we're going to need more dollars to buy all these imports. And in fact, foreigners won't need as many dollars to buy the stuff that we make. And so that'll bid up the prices of the stuff that we export as well as the stuff that we import. So this was a weak economic number, weak inflation.
Analysts are expressing strong optimism about the future of gold prices. Citigroup analysts are forecasting a target of $3,000 for the precious metal within the next 6 to 18 months. Similarly, Goldman Sachs analysts have labeled the gold market as an unshakable bull market. They have increased their price target for gold from $2,300 to $2,700 per ounce by the end of the year. In light of these developments, how do you foresee the future of gold and silver investments amidst changing economic conditions? Feel free to share your thoughts in the comments section below. If you found this video informative, remember to support our channel and activate notifications to stay updated on our latest content. We'll see you in the next video.